All right. Hi, guys. Trust you guys are doing fine. A very good evening to you, wherever it is that you're catching us from. This is David here, and I will be sharing with you some of our views for the upcoming week. This is going to be a weekly market analysis. This is going to be, if I'm not mistaken, the third of these types of sessions that we have, where we just basically look at what opportunities exist into the new week. We look at various assets and then we'll try to see where we can get some opportunities. All right. I'm going to be very quick as we just basically jump into it. As I've always mentioned, I think a good place to start will be to get a check on the USD index because the USD index has it, it's one of it does measure the USD performance against a basket of currencies, and the USD, whether directly or indirectly, does have a very strong the behavior of the USD, the dynamics that kind of affect the USD has a very strong behavior on what sort of like a larger market is, and this is not only for whether you're trading majors alone. For those of you who don't know, majors are a cross of the USD against a major currency of the world. So we will get started with that very shortly. I'm going to be sharing my screen, um, and then we will just have a quick look at that and get started with that. Okay. Last week, against majority of the um, crosses of the USD. The USD was weak. So against majority of its crosses, the USD was weak. And this week we're going to be trying to get a sense of the potential direction of the USD index. Then we use that as a possible indicator of what the larger view of the USD would be. Then, of course, we take it down some of the individual some of the various. We're going to take it down some of the individual crosses of the USD. Look at the majors. Look at some exotic pairs. See if we can get a couple of opportunities in there. I think that if I'm not mistaken, we will be looking at about five or so or thereabout of USD crosses. Then we'll look at the S&P 500. We'll look at gold. Then we'll look at we'll look at BTC as well. Then we'll look at a couple of um, major crosses. All right. So as we can see here, the USD this the USD index tanked a little bit. As of last count, it lost about 0.71%, which is of course indicative because when you come to a lot of majority of the pairs that the USD was crossed against, this is the Euro USD for instance. You could see that this is on the 4 hours. The USD was weaker for almost the entirety of last week because when you put this chart on the 4 hours, there is that from here all the way to here, you actually have what has happened over the week, and you can see that throughout this period, the USD basically was weak, and the same thing when you look at some of the other pairs as well. Some of this is the pounds dollar. You can see that last week this asset rose, and in rising it means that the USD got weaker. So the pounds dollar, the USD got weaker, and the same thing for let's see what other for the USD Japanese yen. Put it on the 4 hours. You can see here this period separator gets the week, gets tells about the week's performance, and even though not quite as much as some of the other crosses, but you could still see from around the middle of the week there about the weakness of the USD showing through. So ahead of this week potentially, one thing I always encourage traders to basically look out for is to look out for places where they can basically do this. I always like to talk about this. I always like to talk about this when you have like a trend behavior, then you can get potential to join. Now this is the typical sort of behavior of a very simple trend, okay? Stating that the best areas for you to get into are after pullbacks. Now, this is a very sort of useful rule that I always kind of, I think it's a good rule of thumb. Now, when you look at this asset here, when you look at this asset here, it begins to appear like we've had impulse correction, and if there is no around this night, breakout of the support around 91.87, we could be seeing a potential rise again in the USD now in the USD index. Now, what could this potentially mean? This could mean that when we begin to check out some of the USD crosses, okay, because in any case, this what we see here is actually a cross of the USD against major major against the major um, um, pairs against the majors: Australian dollar, Canadian dollar, uh, Japanese yen, and the likes. So we could see that if that scenario actually plays out ahead of the week, we can start to see some strength for the USD. Now, that's just a general sort of background information that I think is useful as we begin to think about what could potentially happen in the week. Then, when we now drill down into the individual assets, which is really where like we now start to, you know, obtain a bit more assurance as to what we're doing. Okay, so we have here we have this is the euro dollar, the euro dollar. Now we've seen that in the last, if we were to put this on 4 hours, which is still where we this represents, like I mentioned earlier, the last 2 weeks. Now we had already marked out certain levels that if price should cross. I remember last week we marked out the 1800 level, and the 1800 level that if price crosses above, it will advance towards 1830 and eventually 1900. Now that's exactly what's happened when price crossed above the 1800. It actually advanced all the way up here. Now we're at another critical point of price, perhaps even more critical than the earlier on point, because what you have here, you have around this point, you have a cluster of resistances, and it makes this zone kind of like a more important key zone. Now we see that when price got to 1900 during the week, we could see some kind of a deep back, almost as though price was moving away from that level. Now, if we step into the new week and we observe that this level continues to hold, this can now join that earlier on perception of strengthening of the USD. Okay, but if this level breaks, we can now see an advancement of the euro dollar towards higher levels, towards 1970, and potentially towards 2000 and above. Okay, but this level is going to be very, very significant, and I think that we should watch this very early on in the week, okay, to see what we potentially can get out of this. Now, if this level holds, okay, what we then can, and by the way, when you go to the daily, you can see a reversal candlestick around, this is a pin bar around that sort of cluster of resistances that we identified here. Should this hold, okay, we can see potential subsequent candlesticks, um, um, you know, now basically subsequently coming lower. Okay, but any clear break off above 1910, thereabout above 1910, 1920, can see that this gets all the way up. Okay, so I'll be looking very carefully for that and looking at the reaction of price towards this level. Okay, so that's what we're looking at in that in and around that. Let me quickly check before I go into some of the other majors, and this is important because as you trade majors that have the crosses of the US, you want to also diversify. Okay, let me just quickly check Euro AUD. If you check the chart of Euro AUD from history from in and around, let's say for instance, earlier on in March this year, we've been having successively rising resistance, successively rising support. Then we kind of get to a place where, which kind of you could form something like an ascending channel here. Now, again, last week we could see that i- over the last 2 weeks, this sort of price action here, okay, representing those last 2 weeks, you could see that prior gains were almost entirely extinguished. Okay, for the last impulse move of price. Remember that price moves within a linear trend. You'd see like impulse correction moves. Okay, now, this level begins to become to appear like a very key flaw. Again, here we have that whatever it is that is the behavior of whatever it is that price ends up doing around here, now kind of like gives us confidence as to where next to go because what you have here is a flaw coinciding with a rising trend line that forms a part of an ascending channel. So you have a rising trend line here that forms a part of an ascending channel. Okay. And now you have a flaw here. What is price going to do with this flaw? A breakout of this flaw could lead to further lower levels of price, which in any case will now begin to give stronger confirmation about a potential reversal. Okay, remember, according to the rules of um, uptrends or downtrends, okay, you have a failure of an up of a you have a failure of a trend when resistance and where supports do not consecutively rise anymore. And we begin to watch out for that, and that basically now kind of gives you confirmation. So if price breaks below this floor, we can see a potential go down towards 57.75, which is something in around about let's see about 160 pips thereabout from current levels and even further down. Okay, but should this hold, then we could potentially see that excuse me, we can potentially see that price could continue within this ascending channel. Now, I usually recommend that you go to the smaller time frame, the shorter time frames to for specific entry. Okay, like after a break of this level, you can now sort of go to smaller time frames. You see some smaller resistance and supports there for to get specific entry. Okay, but if this continues, we could actually be calling a potential move of as much as 500 pips thereabout. Now that's something that is very significant. That's something that is very significant. Certainly something to watch out for. Okay, I'm just trying to run through this because of time. So last week we mentioned that this area between this area between around 111014 and 10933 was key. Okay, we mentioned that, I believe. And what you had here is that interestingly, um, price didn't quite still assume a key direction anyways. It didn't quite still assume it. It was actually one of the less reactive to USD weakness. Okay, this USD JPY was actually one of the less reactive to USD because there was no, through the entirety of this entire period of last week, there was no um, um, clear. It was almost like a zigzag in that period. Now, what we begin to look at is what happens when price begins to approach these levels again. Okay, if price starts to approach these levels again, okay, we can now begin to watch out for whether either of these levels will hold. Okay, if either of these levels hold, it now gives us a stronger sense of the potential direction of price. Remember, we mentioned that could see this asset, this kind of like, this falling and rising trend lines here, acting as a pennant, provided, okay, provided that um, this the upper side breaks out. But should this fail to happen, okay, and then we have a breakout on the downside, then we could begin to question, okay, if we're not going to be getting increased opportunities for a down for crossing. Remember, when we begin to have falling resistances, okay, and support in and around this region, we can find a place where there's a correction. Should this level be broken, we can find a place where there's a correction, and then we can join that for itself. These two key levels now begin to play a key part. So these are the levels that we want to watch out for. Now, I spoke about S&P 500 as something that has been like nothing short of a money spinner, okay? Because right from in and around the COVID periods and all, this particular asset has just been rising in response to all the stimulus packages, okay? Quantitative easing, asset purchases that the US has been doing. We've been seeing like endless rise of this particular asset. Now, again, last week we got another all-time high because at this point was our prior all-time high of the previous week, but last week again we got another all-time high. Not entirely surprising because this is something that we've been, as you can clearly see, this is something that we've been seeing for a long time. And like I said, I think it was 3 weeks ago when I mentioned that when you have like trends that are moving like this, every a point dips are an opportunity to join with marginal risk. So it's not like it's absent of risk. And I mentioned that here. Okay, the S&P has since gone here. Now, if you're thinking of joining this, you must understand that currently the market is in an impulse stage. Okay, so which means that it makes sense for you to expect a pullback. Okay, towards some kind of correction. So if you're taking the last resistance before this resistance as a potential next level of support, then you could be looking at 4,500. Okay, as a key level where you might want to wait for. Okay, that's the S&P 500. Still rather bullish until the current shape of price moves. We know that we should not always expect that even in a bull market, corrections cannot happen. But when you look at the overall price action, it gives confidence for that. Excuse me. Now, when you look at gold here, um, quick turn to gold here, we're able to find a rising trend line indicative of rising support and a falling trend line indicative of falling resistances. Now, in linear trends, you have falling resistances and falling support. That's what you typically have. Okay. Now, I know that some traders, because there's a level of discretion that comes with this, some traders could say, "Hey, we could look at this. We could look at this as a potential for what next is happening." That's also a possibility. But the most important thing that we should recognize is that this particular level here, which is one of the reasons why I marked it up, around where price currently is right now, becomes probably around something that is the most important of levels. If price should cross 18,440 as an example, then we know that it could begin to, if it crosses 1840 and gets to about let's say 1860, okay, somewhere around here, we know that we could potentially be seeking higher resistances with the only key level to watch out for again to be at 1918. Now, but if these levels hold, we can see that price can push down further, okay, and that will create opportunity for an impulse move in the downside. So if these levels hold, it can price can push down further, and that will create opportunity for an impulse move. So we're going to watch the area between 1870 thereabout, and about the area between 1870 and about 1770 to see what's going to happen here. to see what's going to happen. So early week, I believe that we should see a bit more clarity about that. So here on Euro GPB, we can see we could connect a falling trend line, and then looking at what happened. So this represents last week's performance, and this was the week before last. Okay, again, price is currently trapped in between these levels, about 18,600 to 1840 there. To sorry, 8,600 to 8 uh 540 thereabout. Okay, I would want to see price sufficiently move, actually, because now we are getting what appears to be a reversal of this. There are a number of price action setups that will tell you that, hey, now we've had a several falling resistances. Seems to be that we are having rising resistances now, and that's not entirely a lie. We have seen resistance, but I want to see a sufficient enough pullback to give me confidence about potential pull up. Okay, so I want to see a sufficient enough pullback to give confidence about potential pull up. But this current structure of price seems to indicate that price could potentially be seeking higher resistances. Okay, so we watch out for these levels. In such an instance, we could see a potential of price getting all the way up to 86.70. Okay, you can get sniper entries with better risk to reward when you sort of zoom down and look at the trend from, like, shorter time frame, having understood what the bigger what the larger time frame images are. Okay, it's very similar principles. If you look carefully here, you can see what resembles an inverse heads and shoulders. Okay, now if you're familiar with such basic patterns, it should look something like this. Okay, like this, with a neckline around this level, which we started out talking about. So you see something like this. Now I'm trying to draw this now with my, okay, and like this. I hope you guys can see that now. Then you have this. Okay, so and you know but price already breaking forth. Now the big question is, how far can it get? Now, again, like I said, seeking a pullback might give you although, I mean, if you seek for it to pull back too much, you might miss the opportunity. That's a risk that one is going to have to take. So you have to determine whether or not you are going to be aggressive on such an opportunity, or you be conservative. If you're aggressive, then you kind of go in without much of a pullback. But if you're conservative, you might want to see price dip further down, see this level hold, then before you kind of join that on the upside. Now, guys, let's take a quick look at Japanese Japanese yen. Okay. At first glance at this price action, it begins to look a little bit like absent of structure, if you like. But you can see here that this sort of symmetrical fall of price, okay, with lower resistances and lower supports here, got broken at about this point. Okay, so at about this point, it got broken. You can see a clear break of this trend line, and that happened last week. What can we potentially see into the week? Every impulse has to have some kind of correction. So we begin to ask ourselves, what are the possible levels in which those corrections could get to? Previous resistant levels easily become support levels. So we can see these levels here. Let us see if we can get some kind of a discount of this impulse that holds around here for potential entry on the upside. Okay, that's something that I would rather want to see, a discount of this level, for potential entry on the upside. Excuse me. And but in the absence of that, I'm going to need clarity, so I might not really sort of focus on that. Quick view for BTC USD. Clearly, this chart is frozen at close of close of market on Friday. You can get better updated charts from like a number of sources, but I will just do that kind of like I just do the analysis based on this current position of price. As we can see here, Prices are on in a very clean impulse corrective move. Okay, very clean and sort of like very easy to identify. You can join up the trend lines there. Price is trading above this sort of blanket of moving averages, which provide a very good dynamic support, a very good dynamic support for price. Now, what is the future? I believe that we're still going to need to see key clear breakouts of 51 in and around the 50-51 kind of level for us to see. And as more as we approach this, I feel fairly confident that this is something that we're going to see. We should see increased um, pressure for Bitcoin to rise yet higher. Okay, on another chart price, I saw that Bitcoin had already gotten to about 51,000 thereabout. So I'm not entirely surprised. Okay, so this is something that we should watch out for. Certainly, it would appear that the basically a look at this price action. Okay, simple look at the price action from this region here definitely speaks of rising resistance, rising supports with indication that this is something that is continuing. This is the most recent, most active um, price behavior. Remember, with everything you're doing, you should always make sure that you manage risk. Risk management is the most important factor, okay, in all of this, okay, irrespective of what you're doing. Hi, Joshua. Irrespective of what you're doing, risk management is the most important factor in all of this. So, whatever you're doing, always make sure that you do not exceed a certain fixed percentage of your account. No opportunity is so great that you want to risk all of your money for. There will always be opportunities in the market. And this is an analysis. You don't take it necessarily as an investment advice. One thing I want you to do is to cross check this with your own existing strategy, cross check it with your horizon for trading. Okay, we have not mentioned so far about whether you're a short-term trader or you're a swing trader or you're an intraday trader or whatever it is. Okay, you make sure that you cross-reference this. These viewpoints usually kind of help us, kind of take us into the week. Okay, basically take us into the week. So you have to also do your due diligence to say what kind of trader am I. Now, for traders who like to do intraday, you can take some of these analysis, and we have a couple of strategies on the RTC. Okay, the Rexite trading course that allow for intraday entries. There's pivot point strategy, the composite SR strategy. These strategies allow you to be able to do intraday to find intraday entries. Okay, um, I'm not sure, Joshua. Do you have anything you want to add? Do you want to add anything to this? Would you like to? I'm going to put you back on the stream. Okay. Guess not. Now, so guys, this is just it. Now, if you have any questions, you can send us an email, or you can. We have a discuss group on the Telegram channel, and also to remind you that we have the PMI coming up. The next session of the PMI it's a 7 weeks personal mentorship program with myself and other mentors here at Suavally, and it's a fantastic program. A lot of our alumni have amazing testimonies for it. You definitely get better as a trader. You get better appreciation for it. A whole range of concepts in trading. I can't go into that. You can go to suavely.com/mentorship to find out more about that. Okay, that's the much I got to share with you guys today. You can always watch this video again on YouTube, and have a good evening.